What's going on, everybody? It's Christian from Stock Hours, and today's video is going to be one of the most important psychological tips that most new traders are going to struggle with, and it's about fear and greed and how it affects you as a day trader. So I'm just going to start off with the definition of fear and greed. So the first one is going to be fear. So it's basically just an unpleasant emotion caused by the belief that someone or something is dangerous, likely to cause pain or a threat. So that's just the definition of fear. So keep that in mind while I go throughout this presentation. And then here's going to be the definition of greed. It's just an intense and selfish desire for something, especially wealth, power, or food. What's going to be most important is going to be wealth, maybe power a little bit. But obviously when you're day trading, there's a lot of fluctuations of money. So that's kind of where greed comes into the picture. People are going to be looking for more than what is given to them. So it's going to cause them to break rules, develop bad habits, and things like that. So there's going to be 3 stages of your day as a day trader. There's going to be the time before you take a trade, during a trade, and then after a trade. And fear and greed can affect you in all 3 stages of this cycle. So I'm going to start off with before a trade. So sometimes where you may experience fear as a day trader is going to be before you even get into the trade, when the stock is coming up to your level. If you're not confident in your strategy, you might be fearful, and it's very understandable. So you don't really know, you don't have track record proving that you're going to be profitable yet. So yeah, you're throwing risk onto the table, but this is kind of how fear would affect you before a trade. So in the very first example is just feeling that the trade won't be green. Obviously, when you're a day trader, nobody has a 100% win rate. So the chance that that trade won't be green is definitely going to be on the table. Now, if you're letting that affect your execution, that's something you have to work on. Something you can do is backtest your strategy to build confidence so that when a stock comes up to your entry level, then you'll get in with no hesitation. So what happens here is people are fearful of losing money, so they're gonna skip the trade entirely. Maybe they're already green on the day. They don't want to take another trade because they don't want to lose those profits, for example. So those are some experiences that most traders have in the very beginning of their career. But later on, when they have more confidence in their strategy, it's something that they usually work past because now they know they have a developed system. So as long as the trade fits the system, then it's not something that's going to cause them to be scared of taking a trade. Now, to go with this, you might be hesitant to enter a trade when it gets to your level. So if you get into a trade too late because when it got there, you overthought some things or whatever the case is, you're going to get in late if you do get in at all. So if you get in late, you're going to have a bad fill, obviously, because the stock is breaking your level. You're getting in higher than where you anticipated on getting in based off of your trading plan. So if you have a bad fill, it just leads you to have a bad risk to reward. If you keep the same stop loss on the chart, wherever it is, and if you're getting in late, then obviously your stop loss is bigger than what it was anticipated to be, just because your execution was off on that trade. So that's something you want to avoid. And again, when you have more confidence in your strategy, in your system, you won't be as hesitant to enter a trade unless if there's a good reason to, such as big red flags that are just telling you to avoid the trade entirely. So that's another thing to keep in mind. There are going to be times where the market is showing you signs that the trade is not going to work out. That's a different story. But if everything is working out and you're still hesitant to enter the trade, chances are you're just fearful of the market overall. So that's something that you want to work past. Now, on the flip side, people might be too greedy before they even get into the trade. So it could be pre-market, it could be the night before, whatever it is. Some people just want to make way more money than what the market is going to realistically offer them. So there's 2 different things that people might do. First, they might size in way too heavy. So when you size in way too heavy, you're increasing the risk that you're willing to take on that trade. So let's say somebody's average size is $1,000. They take 5 trades of $1,000. Now they're greedy because they're green 5 trades in a row, so they just up their size to whatever, $7,000. They can give that all back in one trade, but it's just due to the fact that they were greedy. They sized in way too heavy on that one trade. Whether it works out or not, it's a very bad principle that you want to avoid at all costs. So sometimes people might think, I want to make $1,000 on this trade. How much should I size in with? Maybe whatever the case is. That's something that's typically a greed thing. You want to stick to the same risk management system and very slowly size up over the longer period of time. Not just what can I make in this trade, but what can I risk consistently to grow as a day trader. That's the way you want to be thinking about it. Now, the other example of greed as a day trader is having very unrealistic profit targets. So if you're looking at technical analysis and you know how to look at technical analysis and find profit targets, and you see a lot of red flags at a certain level, that should be your target. Your target shouldn't be $5 above all those red flags just because if it hits, you'll make way more money. Because obviously the chance of that hitting slims down a lot if there's enough reason to believe that the stock is going to reverse way before it hits that level. So looking for more than what the trade can provide can cause you to turn a very easy green trade into a red trade very easily. You would have had the right target if you weren't greedy. You would have been green, and when you look at things over the longer period of time and you can consistently catch green trades, then that's how you consistently grow your account. Some people just want to grow their account in 1 week. They want to double their account, triple their account, something like that. That's typically something that even if it does happen, you'll eventually lose your account because the risk management system is all the way off. So these are some things for fear and greed before a trade. Now, to get to the next step is going to be during the trade, after you already entered. So the first thing about fear during a trade is fearful that the trade won't work out. So it's similar to kind of what I was saying before, feeling that the trade won't be green. If you get into a trade and you get out too early because you think it might not work out and you don't have any red flags telling you that it won't work out, then you're just not sticking to your plan. So as long as you have a plan and you know how to read the market properly, then you should be able to stick to the plan. If the market gives you a big red flag, then you can get out before your planned profit target or your planned stop loss. But if there's no red flags, nothing telling you to get out, then why are you getting out of the trade? So the next example with this is going to be taking profits or losses prematurely with not enough reason to get out yet. So that's basically what I just said. Another thing to go with fear during a trade is fearful of losing or giving back profits. So kind of goes with the first point again. If you haven't hit your profit target yet and everything is working out, let the trade play out. Be patient. If you can't be patient, then you have to change your strategy to something that requires less patience. So the reason people aren't patient a lot of the times is the fear of losing profits. So let's say your trade plan is based off of a longer hold strategy. So if you're looking for a very big move in the stock, it's obviously not going to happen in 30 seconds. It'll take some time to play out. And within that time, there's some volatility within the stock. So you have to let the stock play out to hit your profit target. If you can't handle all that, you have to have smaller targets so that you can respect your plan consistently. That's your main goal, is to have a profitable system, respect the system, plan your trades out, and then stick to the plan. That's how you'll be consistently profitable over the longer period of time. Now, another thing to talk about during a trade is going to be on the greedy side. Let's say you already had a profit target and now you're holding way past your profit target for no given reason. That's just another example of not respecting your trading plan. If you had a target, there's a reason you had a target. Holding runners past a target, that's fine in some scenarios, but sometimes when the target hits, that should be when you sell. Because if you're looking to be consistently profitable, if you hit your target consistently, then it'll help you out a lot. Obviously, if you have no red flags and the stock is still booming way past your target, then sure, you could hold a couple runners. When you start to see a red flag, you can get out. But if you hit your profit target, the stock pulls back on you, and now you're looking for it to come back up, obviously that is not a good thing. That's greed telling you you should have got out a profit target, but you're looking for more. Why are you looking for more? Just because you want to make more money. So this kind of goes with the next thing, hoping your stock will come back to break even or green. So let's say a stock went against you. Obviously, not every trade is going to be a green trade. Nobody has a 100% win rate. So there are going to be stop losses. Now, if the stock hits your stop loss and you don't hit the sell button, it's likely due to greed. You want to see the stock bounce so you can take less of a loss. Now, if you do this a lot, your 10% loss, your 5% loss, whatever it is, could easily double, maybe even triple, depending on how long it is until you finally hit that sell button. So anytime I hit my stop loss, I hit the button right away. I don't really care what happens after that, because I knew that my stop loss was set for a reason. If I hit my stop and it bounces consistently right after my stop, then I have to rethink what my stop is. But no matter what, anytime your stop loss hits, you need to get out of the trade right away. It's a very bad habit if you don't do that. So make sure every single time, if your stop loss hits, you get out of the trade. Now, the very last thing with fear and greed is going to be after the trade. So you can still experience emotions even after the trade. So the first thing with fear is going to be avoiding planned trades because you stopped out earlier in the day. You just have a bad mindset for the rest of the day. Just for example, so if you stopped out of the first trade, now you're red on the day, so maybe you're scared to trade anymore. You think whatever, the market's rigged, whatever the case is. That's just a fear thing. So like I said, nobody has a 100% success rate, so it depends on how you react to some of those losses. If you can't handle a loss, then maybe you're just sized in too heavy, for example. So when everything is working for the trade, you have a trading plan, you have to keep a very black and white mindset and keep the emotions out of the situation, and you have to stick to what your system and what your principles tell you. Over the longer period of time, one trade doesn't mean anything, unless if that one trade you break all your rules, you break the system, everything like that. So if you're sticking to your system and you take one red trade, that's fine. It's just part of the game. That's what it is. Now, if you're skipping trades because your last trade was red, then you're not sticking to the system. You're not letting the overall strategy play out. You might be missing a green trade that was supposed to make up for that last red trade. Another thing that happens after a trade that causes people to be fearful and execute the wrong way is sizing down on an A plus setup to lock in profits on a previous trade. So if I was green, let's say I'm green $100, or let's say I'm green $1,000, and that was on a minus B plus setup. So it was a good setup. I have regular size. Now let's say I see an A plus setup that's worth my full size, but I only do a quarter size because I don't want to give back those profits. Then you're not doing the right thing. Whenever your system tells you this is an A plus setup, it's worth your full risk. Just because it is an A plus setup, everything's working for it. Then you have to keep a very black and white mindset, like I said before, and execute according to your system and your strategy. So you can't just size down on an A plus setup because I had profits before, I want to lock it in, I don't want to give it back, whatever like that. Because at that point, you're letting emotions tell you how to execute a trade. whatever happened yesterday, whatever happened earlier in the day, whatever happened last week shouldn't matter. You should just stick to your system as it comes. If a trade, everything's working out for it, you have a plan for the trade, you have a planned stop loss, a planned profit target, you know what you want to see for that trade, then you have to execute according to your plan. When you execute based off of what happened in the past, then that's how your system and your strategy doesn't play out the right way, because you're sizing down on the setups that are worth full size. Now, on the flip side, on the greed side, some people might experience revenge trading. So you might be red on the day. Now you're taking setups that aren't there, unplanned trades to make those losses back. That's a bad habit. Unless if you had a plan for the trade, don't just jump into anything just to make your losses back, because you can double your losses, you can triple your losses. It can go on as long as you allow it to go on. That's something I've experienced in the past that I really had to fix. Just trying to be green, it's not the best thing. But trying to stick to your system and take whatever setups your system calls for, that's perfectly fine. Another example of revenge trading is going to be somebody who's green on the day, who is unsatisfied with what they made, so they look to take another trade just to hit some daily goal, whatever it is. Let's say you're up 800 on the day and you just want to be up 1,000, so you take another trade. That's greed. Unless if the trade was part of your system, you had a plan for it, everything told you to take it, then that's fine. But if you just took it just to hit that $1,000 target when you're at 800 for the day, then that's not a good habit to build. Just take the 800, move on. There's going to be another trade another day. So this is typically somebody who's unsatisfied with what the market provided them with, whether it was a red trade in the beginning, not enough profits later on, whatever the case is. That's something you guys also want to avoid at all costs. So basically, the moral of the story between fear and greed, it's three main things. This is how I look at it. If you have a trading plan, if you're disciplined about your trading plan, and you look at things in the long-term view, you don't look at what happens today. You look at, if I stick to my system for 3 months, 6 months, a year, where can I be from now? Not, if I size up here on this trade, how much can I make today? How much can I make at the end of the week if I full pour every trade and they're all green? That's not the way to look at it. The way to look at it is, if I stick to my system, in a year from now, where can I be? In 6 months from now, where can I be? In 6 years from now, where can I be? If I do all the right things that I need to do every single day. So yeah, having a trading plan, that's with every single trade you take. If you don't have a plan, you don't have a trade. Simple as that. You need a profit target, you need a stop loss, and you need criteria to tell you to get into the trade. Don't just get into a trade because your entry level hit. It has to hit the right way. If there's so many red flags when that level hits, then it's not worth taking the trade at that point. Wait for it to set up better, or just let it go. And then for discipline, you basically just have to do what has to be done every single day. Whether that's respecting your stop loss, respecting your trading plan with your profit target, your entry criteria, again, your stop loss, and sticking to a strategy over a longer period of time. Not just taking something because you think it's going to go up or anything like that. You have to have an actual built out strategy, back tested strategy, proven to be profitable strategy. And the last point here is just going to be having a long-term view of trading. What happens today shouldn't be so important to where it's going to change your whole year. You should just stick to your plan every single day, and then at the end of the year, all those disciplined days, those good days that you've had, is going to reward you later on in the end game. So that's basically all I have for how fear and greed can affect a day trader. If you guys like this video, make sure you leave a like and a comment in the comment section below. Let me know how fear and greed has affected you as a day trader, and if you've overcome those struggles yet. But thank you guys. Have a good day. Peace.